Most people think becoming a millionaire requires a huge salary, perfect timing, or some kind of special financial genius. But the truth is much simpler than that. Wealth is not built in dramatic moments. It is built in small decisions repeated over long periods of time. If you consistently invest just $500 a month, not occasionally, not when you feel motivated, but every single month without interruption, something surprising begins to happen beneath the surface that most people underestimate. Time quietly becomes your greatest advantage, because money that stays invested does not just sit there, it grows. And then the growth itself begins to grow, creating momentum that becomes stronger every year. This process is called compounding, and it works like planting a tree. At first, nothing looks impressive, but beneath the ground, the roots are spreading and preparing for rapid growth later. In the early years, progress can feel disappointing, which is exactly why most people quit too soon. The reward seems small compared to the effort, but exponential growth always starts quietly and then suddenly accelerates. This is the moment when consistency begins to outperform talent, luck, and even income level. Because the person who simply stayed invested now has momentum working in their favor. Many millionaires are not extraordinary earners. They are ordinary people who followed a simple system long enough for mathematics to do the heavy lifting. When time and discipline combine, the outcome becomes predictable. Not magical, not lucky, predictable. And that means the most important step is not finding more money. It is starting with what you already can invest and allowing consistency to carry you forward. $500 may not feel life-changing in a single month, but repeated over years it becomes a powerful habit. And habits are what ultimately determine financial outcomes over decades. The key difference between saving and investing is growth. Money that remains idle loses potential. Money that is invested begins working on your behalf. Even moderate returns, around 7% annually, can create extraordinary results when combined with time, patience, and uninterrupted contributions. Over decades, steady investing can grow into life-changing wealth without dramatic income increases. The people who succeed financially are rarely the ones chasing complex strategies. They are the ones who followed a simple path without constantly changing direction. When investments happen automatically, discipline becomes a system. Progress continues even when motivation disappears, and that consistency protects you from one of the biggest financial dangers, reacting emotionally during market downturns. Markets will always fluctuate, but long-term growth rewards those who remain invested. Wealth creation is not a sprint toward a finish line. It is a steady climb, gradual, sometimes unexciting, and often invisible in the short term. Progress may feel slow day to day, even month to month, but when viewed over years, the results can become remarkable. What feels insignificant in the moment often turns out to be powerful when given enough time to compound. Small, repeated actions create large outcomes because momentum builds invisibly at first and then suddenly becomes obvious. Much like pushing a heavy object, the beginning requires the most effort with the least visible movement. But once momentum builds, progress becomes easier and more noticeable. Financial growth follows the same pattern. The decision to invest monthly is not about sacrifice. It is about redirection. It is choosing to send money towards something that creates future freedom instead of temporary consumption. Every contribution becomes a quiet investment in your future self, reducing stress later while increasing opportunities and security. Financial independence is not about luxury or status. It is about having choices. The ability to decide how you spend your time, where you work, and what risks you can take. And those choices come from assets that grow consistently over time, not from occasional financial wins or unpredictable opportunities. The biggest obstacle is rarely income level, it is mindset. Many people assume they need thousands of dollars per month to make meaningful progress, but consistency matters far more than contribution size. A moderate amount invested consistently will almost always outperform a large amount invested inconsistently. Over time, most of your wealth does not come from what you personally contribute. It comes from the growth generated by what you already invested. This is why compounding is often compared to a snowball, starting small, then gaining size, speed, and power as it continues moving forward. Eventually, the growth itself becomes larger than your monthly contributions. Many people wait for perfect conditions that never truly exist. They wait for higher income, better timing, more knowledge, or greater certainty, and that waiting slowly steals their future. Because time is the most valuable asset in compounding, and lost time can never be recovered. Winners accept imperfection and move forward anyway. They start before they feel ready. They stay when others quit. They repeat the process again and again, trusting the system they committed to. No genius required, no predicting the future, no magic formulas. Just discipline, doing what needs to be done even when you don't feel like it. Just patience, trusting that time is working in your favor even when progress feels invisible. Just consistency, showing up again and again no matter what, through market ups, market downs, motivation, and doubt. Over years, not weeks, over decades, not overnight. Excitement does not build wealth. Emotional decisions often lead to impulsive actions, and impulsive actions create costly mistakes that compound in the wrong direction. Consistency, on the other hand, creates predictable progress, and predictable progress is what ultimately produces long-term financial success. The simplest strategies often outperform complicated ones because they are easier to maintain for decades without interruption. Complexity creates stress, doubt, and inconsistency. Simplicity creates clarity and persistence. Investing success is much closer to endurance than intelligence. The market does not reward the smartest participants. It rewards the ones who remain invested long enough to benefit from growth. Those who continue despite uncertainty, fear, and temporary setbacks are the ones who eventually see the greatest results. Day after day, month after month, year after year. Small actions accumulate quietly beneath the surface, and eventually, without drama, without hype, and without extraordinary talent, those small, consistent actions turn into extraordinary financial results. What once felt slow begins to feel unstoppable. What victory begins to look inevitable, proving that simple truly does win.